Well, folks, it is 5 o'clock on the Eastern Time Zone. Although I'm not in the Eastern Time Zone, my name is Michael Kealy. It's great to be with you, folks. I just want to make absolutely certain that broadcasting is taking place with no hiccups here. I do see a display that captions the various words that I'm providing. I've got the streaming activated here, and I'd like to welcome everybody out to what is going to be a weekly webcast. This is a TD Ameritrade Education webcast. Hi there, Robert. Good that you can hear me. Ed as well. Fantastic. So once again, it's good to be with you, folks. I'll be hosting this for the foreseeable future. So each and every Monday, we will tackle concepts that are related to the management of a portfolio. And that really, it wraps broadly into so many different arenas. And so there's a lot to explore. Like I said, this is the first of its type, and this will be recurring each and every week. So I would hope that folks can make the time, they can carve that time out to join in. And without further ado, while I go through our disclosures, what I'd like you folks to do, let's just make sure that we're all engaged and active on the chat there. Thanks for the validation on the sound. Would you just let everybody know where it is that you are tuning in from? And how about this? How about the coldest temperature that you've been exposed to in your neck of the woods so far this year? I think that could be interesting. So where are you from, and what's the coldest temperature that you have seen thus far in 2018? All right, we must carefully consider the investment objectives, risks, charges, and expenses before investing. A prospectus can be obtained by calling 800-669-3900. Containing this and other important information about an investment company, read carefully before investing. ETFs that we might make mention of, I certainly intend to in today's session at least, can entail risks similar to direct stock ownership, including market sector or industry risks. There is no guarantee that a closed-end fund will achieve its investment objective, and as always, past performance does not guarantee any future results. International investments involve special risks. Investments in commodities are not suitable for all investors, as they can be extremely volatile. Investments in fixed income products are subject to liquidity, interest rate risk, and may be worth less than the original cost upon redemption. Investments in REITs and other real estate securities are subject to the same risks as direct investments in real estate, including loss of principal. Interest income and capital gains on municipal securities may be subject to the AMT, Alternative Minimum Tax. Options are not suitable for all investors, as the special risks inherent to options trading may expose investors to potentially rapid and substantial losses. Spread straddles and other multi-leg option strategies can entail substantial transaction costs, including multiple commissions, which may impact any potential return. Futures and futures options trading is speculative and is not suitable for all investors. You must have a futures trading account in order to get active in the arena of futures trading, and not all those who apply will be granted a futures trading account, so bear that in mind. Forex trading involves leverage, carries a high level of risk, and is not suitable for all investors. Any investment decision you make in your self-directed account is solely your responsibility. Past performance of any security or strategy doesn't guarantee future results or success. All investing carries risk, including risk of loss. Asset allocation and diversification do not eliminate the risk of experiencing investment losses. No soliciting, no photography, no part of this presentation may be copied, recorded, or rebroadcast in any form without the prior written consent of TD Ameritrade, Inc. All right, so it looks like the low point, holy cow, Jose, are you serious? You saw minus 40 this year. You must not have been in Miami, if I had to guess. I'll actually be in Miami in a couple weekends, out there for a market drive event, which I'm very excited about. Okay, 40 degrees. I just saw your follow-up comment there. All right, Montana, Jim had about 5 degrees. That's a little bit cooler than we've had here in Salt Lake. I think we've been in the mid-teens as far as the low point thus far this year. No problem, Jose. But I know that a good many folks out there have seen unseasonably cold weather thus far this year. We're still waiting for it here in Salt Lake. We have an abundance of ski resorts that are pretty close to the city here. In fact, some of the closest resorts to a major airport are right here outside of Salt Lake. So we're holding our breaths collectively still for the big snowfall to arrive. It hasn't quite happened. Anyhow, let's talk portfolio management for a moment. Okay. What we're gearing up to do is to talk about the various asset classes that can potentially be combined in some way, shape, or form to comprise a portfolio. Now, as far as how diversified that portfolio winds up being, that really hinges upon how many asset classes an investor might like to have in their portfolio, and what the composition of those individual investments even inside of an asset class look like. And so I'm speaking conceptually before we go live on the website and start going here and there. And this will be on the tdameritrade.com website, just as a heads up. That is what you are seeing on your screens right now. But a diversified portfolio can be composed of quite a few different asset classes. And that's a pretty typical starting point for most folks on gauging how they are going to manage their accounts, is how many asset classes. Now, prior to that, we are usually involved in some degree of a planning phase. And the planning phase can certainly encapsulate plans that you have for what type of a retirement you'd like to achieve. And in future sessions, just to kind of lay more of a groundwork on where we will be heading as a group. In future sessions, we can certainly make use of some fantastic tools at the TD Ameritrade website that enable us to have a better handle on what kind of retirement we might be seeing on the basis of the plans that we are laying into that retirement planning set of calculations. This session today is not one in which we will derive those retirement needs. Really, that's what a lot of the upfront planning is involved with, is what kind of retirement needs analysis am I looking at on the basis of the assets that I've accumulated, on the basis of what type of a retirement an investor might be strategizing for, that sort of thing. So today's session is more broad-based on asset classes and the usual areas in which investors can potentially diversify. Now, another very important theme, and something that I'll look for in the chat, we've got a group of more than 50, so that's fantastic. And I'm glad that you folks found this, because we've got a brand new webcast schedule as of today. And that's fantastic that you are all here. This is really the maiden voyage for this class. But up front, another very important decision, and something that I'd like to see your thoughts on in the chat there. And a lot of you have discovered how to utilize that chat. But it involves how active you'd like to be, in addition to or instead of being passive. And I am not here as a webcast instructor to tell you that you must be this way or that. What we want to do is we want to learn about different approaches toward investing, including the active approach. And that can involve a lot of moving parts. It can involve very few moving parts if you opt to go that way as well. So I'm planting seeds here, because many of our sessions will involve a focal point on either adopting a more active approach toward the management of one's portfolio, and or adopting a more passive approach toward managing one's portfolio. And certainly a lot of folks will pursue a blended approach. They might have a splash of each. Now, I'd like to see within the chat, how many of you follow an active approach, you can list a capital A if that's you, a passive approach with a capital P if that is you, or a blended approach toward managing your portfolio, which is a capital B. And I understand for those of you that are scratching your heads and saying, wow, I'm brand new to all of this, Michael. What do you mean by that? We will get into that. But actively managing one's account is being more nimble, being more reactive and responsive to the goings-on within the marketplace, to the goings-on within various asset classes, and having an ability to switch around one's investments to hopefully achieve a return that surpasses that of doing nothing or being completely passive. Okay, good. So we've got a lot of people that are filtering in with their comments. So I see a lot of B's for blended, and I see a lot of A's. I have yet to see. Okay, Din says I would have been better off, or I would have done better, I'm sorry, being passive. Do not pound yourself into oblivion, because I think many investors will come to that realization that, wow, if I had had a fairly static basket of securities for some while, the performance of the overall marketplace has been stupendous, and the returns in all likelihood would not have been shortchanging you from achieving, let's say, performance that's in line with a lot of what people desire out of the marketplace. Now, I know those are very broad generalizations that I've just laid out there, but my main blunt point is that the market has performed exceptionally for quite some while, to the extent that a fairly passive approach would not be something that most people would be feeling as if that was the wrong move, or that that was a disenchanting element. But a lot of us like to use our intellects, like to use the tools and resources that we have available to operate on a more active front. And I think, I'm seeing that in these replies on the chat. Thanks to those of you that have replied. Okay, good. So let's do this. This is our starting out point, once again, on asset allocation. That's the real theme for this trading, for this educational webcast, this Wirecast here. So I'm at the TD Ameritrade website. You should all see it at this point. I'm highlighting, well, actually, I'm just hovering, which highlights the field for planning and retirement up there at the very topmost toolbar. So from planning and retirement, I am then going to come straight down and to the right to where you see a field for investment approach. I'm left clicking right where it says investment approach. Now, this is just an overview of an overall plan that an investor might set in motion for setting goals all the way down the line to evaluating progress. On the left menu bar up toward the top, you've got a separate hyperlink entitled How to Build a Diversified Core Portfolio. I'm left clicking on that. Once that has been done, notice that there are a number of different outlets that you can travel toward on building a diversified core portfolio. What I'm going to is right there in the segment labeled 2, Set Your Portfolio Strategy, and rolling down to where it says Portfolio Planner. And I'm left clicking. That is a hyperlink. It's underlined there. Once I've clicked upon Portfolio Planner, I wanted to acquaint you to these various asset classes. You'll notice that we've got asset classes listed as equity, specialty, fixed income, and then other/unclassified. And obviously, this demo account that I'm making use of, it actually includes no positions in the account, and thus mine shows as being open-ended at this point. There are no assets in the portfolio that TD Ameritrade is grabbing from this login that I've used on this demo account. So that may or may not be the case, depending upon whether or not you have positions within your TD Ameritrade account. Now, this enables you to additionally see that there are no preset percentages that have been outlined as far as current portfolio planner allocations or target portfolio planner allocations. And, that's as it should be, because this is a starting out of the gates kind of a philosophy here. However, and one other thing that I should mention is that you can, depending upon which you prefer, you could opt to listing dollar values as what you'd like to plan on, or percentage allocations. I think the percentage model makes a lot of sense. That's what you should default to when you open this up. But what I wanted to share with you is that, while this is a starting out point, there is another spot that you can head toward, and I wanted to draw everybody's attention to this for a couple of reasons. Now, I've got another page load that I had logged in so that I didn't have to lose what was right over here, and I can instead go to a fresh new page here. And I wanted to point out that behind the education link up at the top, then you're going to see that you've got a range of options here. Where I'm heading is into a new course entitled Portfolio Management that's been loaded onto the website here at the Education tab. And I wanted to show you how you can locate this. I think one of the easiest ways is to go to the Overview tab here. So I'm hovering on top of Education, and then down and immediately left underneath the bold-faced topics, clicking Overview. Okay, so here we have the overview. And notice you've got, right in the middle, it says What's New. What's new would be these various courses. Income investing, stocks fundamental analysis, something that I'm heavily involved in as far as an area that I enjoy educating on. Portfolio management, which is where we are at right now. And here's the thing, folks. This educational webcast is meant to drive forward from the concepts that are presented in this course. And so it makes sense to become as familiar as you can in the time that you have. Hopefully you can carve out a significant amount of time and you could really have at it with this new course. Now, this course was just launched this year, so this is brand spanking new, as were the trading options and stocks technical analysis. So if I hover over portfolio management, I can come right down here to where it says Continue Course. Now, great question. Has this been updated? Yes, this course content has in fact been updated. For those of you that may have been familiar with it in a kind of an older guise, if you look at it that way. So yes, that is the case. Now, as we're looking at it, this is the lessons that have been divvied up into 7 main areas. So these are the 7 lessons within the course. An introduction, investing basics. If you wanted to know, what's involved in investing basics, you can just open up that pot of information and immediately it unfolds and you can see that that's got 7 subsections, including protecting and growing your money, the financial markets, stocks, bonds, cash, and alternative investments. Okay, so these are asset classes, right? Stocks, bonds, cash, alternative investments. Now, some of you may wonder, what on earth do they mean when they're mentioning alternative investments? Is that like Pokemon cards? No. Well, I suppose it could be. Everything has a value, right? Or is worthless, one of the two. So I shouldn't knock Pokemon cards. I'm sure that many of them have significant values. My son went through his Pokemon phase a number of years ago, so now I can make light of it. Anyhow, alternative investments include, and I'm just showing you, if you were curious, okay, what does TD Ameritrade see as being a relevant alternative investment? Well, it could be a real estate investment trust known as a REIT. Could be commodities that include things like steel, oil, basic materials, those types of things. Options and futures, foreign exchange. Now, that opens a huge world of opportunities and a huge world that you could educate yourself upon by attending our licensed educational webcasts as well as heading into the various courses that deal with these types of investments. So again, I wanted to get you acquainted with the course itself. Now, we're at the phase where we're talking asset classes and the diversification elements that could make sense as, again, to come back to starting point, our square one, for those investors that adopt a more passive approach. They're still going to be, in all likelihood, using some degree of diversification. For those investors that are going to be operating on a more active front, and we'll teach classes on each of these like I'd mentioned up front. For those that are going to be involved in a more active style of portfolio management, then it may be that you wholly leave asset classes at a point in time where you figure that you're better off as an investor. An investor says, well, I think that I'm best served by seeing opportunities in a wholly different asset class. Just as an example, if interest rates were to skyrocket on the upside, are there specific asset classes that will do poorly in the midst of skyrocketing interest rates? And the answer is, if past history bears any relevance to the future, it's never a guarantee, but if it bears any relevance, then areas like bonds and real estate can really suffer if interest rates skyrocket. I did use that term specifically, that term skyrocket, an enormous move in interest rates, right? So anyhow, allocating a portfolio and diversifying a portfolio. These would be areas that will really be, situating ourselves within this weekly webcast. If I were to click where it says allocating a portfolio, here we go. Asset allocation, right off the bat. Modern portfolio theory, Markowitz and crew. Portfolio allocation based upon life stages. So if I came into this area, for instance, based upon life stages, then we'll see that it lays out a demographic, really, of different phases in life that people can obviously be within. From young professionals that are just, in many cases, having investable funds that they can utilize and be thinking about this world of investing, to those that are retired. So I wanted to ask of the group, would you mind using your chat once again for me? Which phase are you at in terms of this outline of life stages? And I know it's a little bit small in print on your screens, but young professionals at the far left, and then established professional, peak earner, and lastly a retiree. I am wondering, where are you folks as a group? We've got over 70 people that are on board this webcast, so that is a good many, and I've only got about a dozen that have been actively using the chat. And so I see, all right, we've got some retirees in the group, established professional. I'll just wait for that to filter in. And so you've got, I'll come back to that in just a moment. You've got the different allocation profiles that are listed as examples. Notice, this is for illustrative purposes only. This is not a recommendation of any specific asset allocation. This is merely an example and to get the wheels greased, so to speak. So if we're at the peak earner phase, as an example, then having an allotment toward equities or stocks. And I say equities because when we come over here onto the TD Ameritrade portfolio planner analysis, then they do use the label equity, but that's one and the same with stock. 45% bonds, 10% real estate investment trusts, 5% alternatives, and 5% cash. Now, that's just merely one sample, right? Now, I wanted to mention this while we're looking at these profiles. This isn't the only way in which you can consider, in which investors can consider how, how they are going to allocate. This is allocation by asset class. But an investor could also decide that they'd like to allocate by strategy. Okay, so a lot of retirees in the group here, and welcome. I am so glad to see that you're carving out time to learn more about investing and managing funds. Even for those of you that are leaving the active management to portfolio managers and money managers and what have you, this is the type of session where a lot of information can be shared to help investors understand what's going on with those accounts and hopefully have more intelligent discussions with those folks that you've entrusted. Okay? What's another way in which we could allocate? And I'll give you the two-word hint. By strategy. What do you think I'm getting at there? How can one allocate by strategy? What would be a strategy in light of your overall portfolio? Any thoughts on that? Those of you that went through the older version of the portfolio management course, you may know what I'm getting at here. I'll give you some hints. One of the strategies starts with a G. One of the strategies starts with a V. You're all circling around it. I'm not asking the question in the proper linear format, I don't think. One starts with a G, one starts with a V, and one starts with an I. There we go. I see references to income, growth, and value. Bingo. So that would be more of an allocation by strategy perspective. And that is another way of heading. Now, if that were the case, if you allocated by strategy and you said, an investor says, and I'm just going to use random numbers thrown out there. An investor says, I'd like 30% of my account to be oriented to growth. Then which of these buckets could be considered growth allocations over at the portfolio planner when we're looking at things like domestic equity, international equity, specialty, domestic fixed income, etc.? It would be equity. It would be specialty. Allocation by lottery ticket, Jim, I love it. Let's not lean on that too heavily. No, but if an investor said, well, this portion of my portfolio is going to be allocated toward growth, then that tends to be equity investments that are thought of as growth in nature. Investing by value as a strategy also tends to have a featured focus on equities. Now, that's not to say that you couldn't spot value, and these are the things that we'll be tracking toward as we get, more and more advanced with this subject matter into the realm of practical application, which we're going to have a little splash of that. By the end of the line today, we will be looking at some tools to locate some opportunities that fit a given profile. But if you were allocating by value and you said, well, a certain asset class like commodities look really cheap on the basis of a certain track record, and I could come over here onto my Thinkorswim, which should now be floating into your screens individually now. Thinkorswim. I've got the Thinkorswim platform up, which enables me to grab a more advanced chart. I just happened to be on QQQ at that point. But let's say that that we were curious about a long-term track record in the area of commodities, for instance. And we knew that one of the ticker symbols that represents commodities of many, and this is, again, no recommendation. This is merely an example of how we could adopt perspective on an area of the market like commodities. So that ticker symbol is DBC. It's a PowerShares ETF, Delta Bravo Charlie. If we took DBC and we said, all right, what does that look like on the basis of the last 3 years? Then you could immediately plot that out. You've got a time setting up here at the top menu bar within your Thinkorswim charts. If I wanted longer frame of time, I could certainly do that. I could go to, how about a 5-year perspective, and there we are. And that really paints a different picture now, doesn't it? Because look at where commodities were as a group represented through this compilation of commodity types of stocks in DBC, that was a good bit higher than where it now lies. Now, it does look like on the basis of a 5-year perspective, commodities are toward the low end of the range versus being toward the high end of the range. I think we could all probably concur on that. Now, if we took another area of the market, for instance, let's say the asset class mid-cap equities, represented through a very commonly known tracking stock like IWM. Again, this is one of many. There are quite a few different, and we're going to be looking at ETFs and screening for a few different reasons within the world of ETFs in a bit. But if we were to look at the 5-year track record of IWM, this is the iShares Russell 2000 ETF, that's a pretty good representation of the mid-cap area, then we'd see that, you know, this does not have the same appearance of DBC that was toward the low end of the 5-year channel. In this case, IWM is clearly toward the upper end. In fact, it's about higher than it has been in the last 5 years at this very moment, at this very time. So back to my original, you know, what I was mentioning earlier, was that if you had a perspective where you were willing to allocate a certain percentage on the basis of growth, another percentage on the basis of value, then that can have you looking at the same asset classes as growth investments in one market time frame and as value investments in another market time frame. So that throws a little wrinkle into mind when it comes to, you know, how this portfolio planner tool appears, and a wrinkle with respect to this as well. But this is what's in the portfolio management course. I mentioned that growth, value, and income perspective because for those of you that like to dive very deep into the world of fundamental analysis, oftentimes that can be a starting point on how we approach the fundamentals within given companies, meaning that investors may look for specific criteria to be applicable to the value world and other specific criteria to be applicable to the growth world. Okay, so as it relates to what you folks might be strategizing about at this moment, I think what we can probably circle around together at this point is that a profile that lists out the allocations into broad areas like stocks, bonds, real estate, and cash can make a huge degree of sense for you to give serious thought to that as investors, and I'm speaking for all investors out there. And this can be a good starting point. It's right here in the course, and I realize I went pretty much right into the middle of the course at that point onto the allocation of a portfolio, and we dove right into life stage. And then we're migrating into this world of diversifying a portfolio. And diversification can take many shapes and forms, including international diversification, including different sizes of companies for your diversification, from small cap to mid cap to large cap, to diversifying across the fixed income world with different types and stripes of bonds and time frames. All of those things I can pull into the domain that we'll speak about in these weekly sessions. So, you know, I'm really wanting to paint more of an overview in this first webcast, in this first weekly webcast that's provided on this topic of asset allocation. Now, let's get busy. In our remaining time, you know, I don't want to push beyond about 45 to 50 minutes is usually a pretty good sweet spot for the types of sessions that I provide, and that's no knock on sessions of differing time frames. That's just, it fits well with the topics that I've usually been involved with, and I have been teaching on the basis of market dynamics since 2001. So it's been a long while that I've been teaching these subjects, but I figured it could make sense for us now that I've painted a bigger overview to talk about the active versus passive kind of a concept. And again, that will be discussed at further length, when you go into the course, you can see that there's an entire chapter that's devoted to passive portfolio management. And that passive portfolio management largely is going to make use of the arena of exchange-traded funds. And so when you come into this section of the course, there are certainly, some specific outlined activities that can be taken even in light of a passive approach, including rebalancing. But the fact of the matter is, for many folks, their overall portfolios may not be completely where they'd like them to be confidence-wise for a variety of reasons. And so we're going to discuss how you can make use of some tools at tdameritrade.com to be on the prowl for what might make for some opportunities in the worlds of different asset classes and using ETFs to boot. So you'll see a lot of flavor and extra color, I think, that will be applicable if you do spend some time with the course. Now, having said that, let me head into the area of research and ideas. I'm at the main topmost toolbar at TD Ameritrade, just below the account, research and ideas, and then rolling down and into where it says Market Center, just below the bold, ETFs, Market Center. Here we go. All right. So within the ETF Market Center here, this is feature rich. This area, like most broad areas of the tdameritrade.com website, be ready to go down a lot of different rabbit holes if you get click happy here. And the leftmost menu bar really is would comprise the main areas of the Market Center here, meaning that you've got Market Center, profile categories, compare funds, analyst reports, on down, and on down the line from screener to commission-free ETFs. Now you'll see that what immediately populates is this ability to see specific ETFs that have been highlighted as being representative of a specific sector, and this is alphabetized. So it just automatically used basic materials as the starting point. But this is another way of diversifying, isn't it? Within the basket of equities that you consider is to diversify across various sectors of the market. And these would be the broad sectors, including real estate as a sector. So, this is just a compilation of a handful of each, and it just says view all matching ETFs. So there are 35 that fit the profile of being in the sector of basic materials. How many would be in an area like, let's say technology? 40. So nearly the same number. And this is just, the first 5 or so that appear there. Now, we had talked before about the asset classes of commodities, of fixed income, of alternatives, those types of things. So if you were to click on commodity exposure, then this is very helpful because you can see that there's been a breakdown of ETFs that have exposure to the broad areas of commodities, including agriculture, energy, broad basket, industrial metals, precious metals. I had used DBC as one representation, and there you go. That's one, and you've got other commodity sector ETFs that are offered through iShares and iPath, etc. Right? So those are commodity exposure ETFs. Now, if you were after the ability to, let's say, run a screen on ETFs, then you've got that can be selected from the upper left menu bar here. I'm just kind of rolling my mouse around so that you can see it. I'm clicking screener. Here we go. So down at the bottom, you've got predefined ETF screens. And they have various categories. Now, it makes sense to at least read the blurb or the paragraph that explains what that particular predefined ETF screen is all about. So it will explain those, from inflation-protected bond ETFs to currency ETFs. That's an alternative basket that could be elected there. For currency ETFs, you've even got bear market ETFs. Let me know when the bear market is upon us. Something tells me that it's not here just yet. Market's hitting all-time highs. But when we look at your different categories here, that's the fund category. You could also click right where it says standout. And if I click standout, then it's got, the ability to screen for ETFs that feature low expense ratios, for instance. Or those ETFs that are rising on strong volume, that sort of thing. And so those can be selected, right? Maybe you like the looks of a low expense ratio ETF. Certainly that is something that will be highlighted within the coursework, is having a focus on what kind of expenses are inherent within that ETF, because that's important to take a look at. Now, when you run that, you say, well, my goodness, it looks like the only thing that was scrutinized within this ETF screen was simply the net expense ratio. And, well, that's what's featured here. You've got the net expense ratio and then the category that particular ETF fits within. Now, maybe that looks fine and dandy for a lot of folks, and they say, well, that's all that I need, right? If I'm in the mood to screen for, let's just say, large growth category ETFs that feature limited expense ratios, meaning minimal. These are minimal when you're in the 0.0 something category. Then you can select this. Now, this is a heck of a lot of ETFs that have now been listed. Notice up here at the top, I'll highlight it. It says that I've screened for 361 fitting matches here. And that's probably a little more than a lot of people would like, or a lot more than many folks would like to work with. Now, when you look at the Morningstar category, that can be selected as far as a column heading upon which you filter. So if I were to click Morningstar category, now we see that, okay, it's aggregated things, and it shows me, and I've got 50 resulting matches on each page. And we can see, okay, these are all corporate bond ETFs. I could go to the next page. How many more corporate bond ETFs do we have? Okay, it takes us down to there. But depending upon the category, folks, you may have quite a few, an abundance of ETFs that are selected, or you may have just a handful that you figure, well, that fits the bill for me personally as an investor. To have a handful is great. Diversified emerging market ETFs. You've got just a handful of those that fit the profile. Those are typically very expensive ETFs when it comes to net expense ratio, because think about the aspect of being more involved with the analysis of stocks that are not located in the United States. That does feature higher expense ratios by and large. But when I come down a little bit further, remember what I had mentioned, or at least called out, as far as an area that some folks might like to look within, would be large cap growth. I'm still not there. And at this point, okay, now I'm there. These feature the ETFs that put a focal point, and within their prospectus, the main category that these ETFs belong to is large cap growth. And so there I've got, at least in terms of my quick off the cuff here, about a dozen or so that fit for the large cap growth from various providers. When I advance it forward a little bit further, then I've got another 2 or thereabouts. So that's not a huge array of ETFs there. But in the remaining time that I have with you folks, I wanted to open the door to how we could screen in a more rigorous fashion by using this modify screen function up here at the top. So if I were to click modify screen, what this does is it brings up a whole new world of opportunities as it relates to screening. And this, I realize, will be a lot of information to take in, especially at the tail end of a session like this. But the overview category features these various line items. So if you were, for instance, after an ETF that fit a certain type, and by type, it lays it out for us. Once I've selected that, it says, well, are you after an ETF that tracks equities, sectors, internationals, bonds, or commodities? Well, that makes life a lot easier. Remember what we had just seen formerly. We had 300 some odd stocks. In clicking equities, that boils it down from 361 to 146. If you were to go international, then that would broaden that. Notice that allows you to choose several at once. That would pull equity ETFs as well as international ETFs into the mix. And you'd have 200 or so at that point. I'll leave it at equities. And then let's say that you wanted to use, just to get you more familiar with what's in here, you can select Morningstar categories as well. And there are a huge array of various categories, from multi-alternative, I have no idea what that even means, to munis, to non-traditional bonds, etc. I mean, there's a huge array in the Morningstar. I'm going to do away with that because that's fairly overwhelming. And then you could say, well, what about the Morningstar style box? Oh, okay, this one's a little bit easier to grasp because it's got 3 large cap styles, value, blend, and growth. Same for mid caps, and then the same for small caps. So let's say that your preference were to be using an ETF screener of this nature for international equity ETFs. Well, if that were the case, I'd say, uh-oh, I need to select international up there. I need to toggle that on, equities and international. And then you would make the decision as an investor, well, is one of these line items an important way of filtering from here? Do I care to select large cap value versus small cap growth, etc.? Let's say that I elect small cap growth. Wow, that really pares down the list of results that we'll achieve out of this scan because it brings it down to 8. See, over here on the right-hand side, we can then note just how many stocks have fit the profile. That would be a grand total of 8. Now, that was the Morningstar style box. Notice you've got a whole outline of this, that, and the other. Now, ETFs can be used for all kinds of purposes. They've pretty much built an ETF for virtually everything out there that you could possibly think to invest in. And they've gotten quite creative, including featuring ETFs that have inherently derivatives that underlie their leverage factor. You've got inverse and leveraged ETFs as well. They tend to be, popular stocks for many people that like to be on the very, very active side. Now, if I were to click a whole different category, now again, this is more of a broad-based overview, folks. I'm not getting to kind of an end of the line where we've got a portfolio allocated in just one session. This is going to take some time to develop here. But when you click the portfolio tab, you might wonder, well, what does this mean? Something like valuation. Well, this enables you to select those particular ETFs that feature companies with price to earnings, total earnings in a specific area. That's for the whole ETF. That would be the valuation category. In fact, you could even come here and select other qualifiers under valuation. So there is a lot to explore within this. Now, most folks that are screening for stocks or ETFs on the basis of a set profile, most folks will incorporate the amount of average trading volume so as to sift out those companies that trade, or those companies or ETFs in this case, that trade on extremely limited trading volume. So if I selected trading volume, then maybe you say, well, on average, it says that 10-day trading volume amongst these ETFs would be about 590,000 shares. So what would it do to this list of potential results if I click above average, 20%? Okay, that would only reel in one ETF. If I chose average 20%, that would be 4 ETFs, right? So I'm not going to select that. I'm just going to leave that completely off because I'm pretty much, at that time allotment that I think makes a lot of sense and that I've been provided. And so what we'll do here is say, well, you've got other categories that you can look at. Some of these categories are very fitting for the world of mutual funds and ETFs, things like alpha and Sharpe ratios. Exposure. This could be sectors. This could be areas of the globe that you select in this case. And so if I wanted to see, okay, what kind of matches am I getting out of this screen that I have just run? So as planned, it did bring up the small caps that are listed as growth oriented that fit the profile. Naturally, we'd have some of the big, sponsors of ETFs, the fund companies here like iShares and Select Sector Spiders and Vanguard. You've got a litany of these particular fund companies that have appeared, and then the corresponding expense ratios, which are very, again, I'll use the term minimal. These are minimal as it relates to net expense ratios. And it probably will take a little digging to see what kind of expense ratios are inherent in various types of ETFs, but that's exactly the reason for using these kinds of tools here at TD Ameritrade's website. So again, how did we get here? Let me just review this so that nobody loses track entirely of how we got in here. We went to Research and Ideas, ETFs Market Center. From there, you've got the pre-built scans on the basis of various sectors. I didn't even show you the other boxes down here, but they are there. And then we went into the actual screener that was listed there, and you can even get a breakdown of things like commission-free ETFs that are applicable to the TD Ameritrade clientele. So with that, folks, I'm going to bring us back over to our original screen right there.